It's green, I'm okay, right?
Yeah, good, great, all right. 6 o'clock. Let's call the budget workshop to order. Linda. Huh. Sheesh,
Long day.
long day. Sue, Finance Director Sue, if you'll walk through your memo, please, and then we'll walk back on your questions and work through it.
Okay. Good evening, Mayor and City Council members. I'm just gonna walk through, as the Mayor said, I'm gonna walk through the entire memo. And then we'll go back and take questions and we'll look at each section. That way you'll know if something's going to be answered, so we don't get sidetracked in one section and then it comes in another section. So just for introduction, as you know, we adopted our preliminary levy. And that levy can't be increased, but it can be decreased. So we adopted it at 3.1 million, and the tax rate is 16.86% in our preliminary levy. And we did have a couple workshops in August and September to review the operating needs for 26. And we did an initial review of your budgeted projects. We were trying to determine the required levels to support those initiatives, and there was some questions on some of those things. We also had some questions on those projects, the possibility of using funds to move up scheduled work on park projects. Talking about prepaying the city's share of the new fire engine that's going to be added. The city hall repairs, or the analysis of needs for city hall, the state of location, or leasing space, and then staffing. So all of those things were possibilities, questions that were raised, but they're not worked into the budget at this point. Staff did complete a review of the budgeted projects, so I put that together, and that would be in Appendix A. That has a summary of the reserves and the fund balances based on the 2024 actuals. I estimated the 2025 expenditures. I went through the bills that we had up till now, and then I looked at what was budgeted and what was not done to the best of my ability. And I put in the 2026 estimates after our previous work sessions. So to make it easier to work on this, I removed the items that I had put in the general fund operating budget that were part of the capital levy in 25, and I put them back into the capital portion of the levy now. I did that to make it easier to have a discussion in comparison to prior years. So the 3 things that I took out of the Appendix B that I had moved from capital over was the microsurfacing costs, the comprehensive plan costs, and the Lynn Drive culvert. So I took out the levy amount that I said that was previously in capital, put it back in capital, and then I took those 3 expenditures out. So Appendix A then includes the budgeted projects plan by department. And this has been updated, as I said, for the items that we previously discussed, as well as the estimated reserves. So you focused on the 2026 portion last time of the CIP, and you deferred discussion on future years to a later time. While we did have some studies and discussions on these items, there's still ongoing meetings and studies on some of the projects that are listed on there. So I know that you still have some meetings later on about City Hall. You were still having some discussions, on the fire truck and this, the other things. An in-depth discussion with the council on these items in the CIP may need to be held at a later date. But I would like to draw your attention to projected reserve levels, and that should be noted when we talk about the use of fund balance. When the city was a township, the road and bridge fund and levy was used for both operating and maintenance items. And we're not doing anything different than any other city is now. It's just the way you had to report those when you're a township. And my husband works at Whiteberry Township. So the road and the street improvements, they combine the operating costs and the capital costs and put them into one levy. When we became a city, then we split. We no longer do a road and bridge. We just do an operating levy and a capital reserve levy, right? So I broke it apart to put the operating costs in the operating part, like most cities would put in their public works, and then the capital things back in there. It's just that since you've had turnover and you have a number of different people working on things, it hasn't always been done consistently. So we're trying to get to a baseline, and we're trying to get that we have a base, and then we have building blocks. And I think that next year that we can start earlier And we can start working on the capital and have that hammered out before we get to the operating. But anyway, when you close the road and bridge fund, you closed, most of the funds there went into the operating fund account and not into the capital improvement fund. So I had a question here, like, is that something we may want to change or look at?
Can I tell you why we did that? I know we're not supposed to speak until you're done, but our annual report talks about the road and bridge fund, and it says the road and bridge fund accounts for resources accumulated payments made related to road maintenance and snow removal.
That's not all it was though.
Well, that's what we're telling the public. That's what's in our annual reports. So if our annual reports are wrong, we have to change that. Because nobody else, that's the only thing that the public gets to see. They don't get to see the work papers.
I understand that. I'm just saying what it
And I'm just
comprised.
explaining why we did, you weren't here when we did that. That's why we did it.
Okay. Looking at past history and when projects or funds have not been used, it just becomes a part of the fund balance. So should we be looking at encumbering funds after the end of the year for projects or expenses we've already levied that were delayed and do a budget adjustment? Now, I could see that in 24 and for the 25 budget, it looks like that practice was done. They moved some things over and put them into the reserve funds. That's what those transfers were that you did at the end of last year. Now, when I was in Red Wing, what we would do is so our budgets didn't fluctuate enough from year to year, so we didn't have big increases in them. After we adopted the budget and when the next year started, we looked at after our audit and we could encumber funds. We would move those reserves over into that line item if we knew we hadn't spent them, but we were going to. And so that way, we weren't fluctuating our budget up and down. You have done some of that already. I'm just saying that we might want to look at a more formal way to do it so that we all know where the things are going and what we've done. And that would come back to council and it would be done as a budget adjustment. If we did this, it's going to help smooth out the budget from year to year, as I said, when you set the levy, as well as designating your excess funds for the purposes that they were levied for. I also suggest in the future years that we start the budget process in April and that we work on a CIP in May and June. That's going to give us time to have the capital part of the budget done before we start working on an operating budget. So then we have an idea of the reserves we have, what we need, what's coming up. And then we start looking at, the operating expenses. And if there's any operating expenses that are going to entail, just because you build capital and you put things up, then you got to maintain it. So then we have to work that into it too. So that's just going to give us a better idea. And it's going to give us, and it's going to be about the time the audit's done, so we know what our reserves are so that we can do some budgeting and long-range planning. Now, I have developed a long-range plan, but we really don't have a base yet, and we need to know the building blocks that we want to put in there. So that's why I think next year is probably a better time to use that, but I haven't put it together and gone back to 2020.
Okay.
So in Appendix B, that's the budget summary. Those are the sheets you had before where I've already told you. I only took out the part of the levy that was in here, and I took out those 3 places, and they're highlighted in orange on there. So if you see like a peach color, a real light peach color, those are the only things that changed on this whole packet. So there really isn't anything that you guys haven't discussed or you didn't authorize before that's in there. I just moved it over to these budgeted projects where there was some reserve funds, so that we can use some fund balance for some of those things. Like I said, I removed the capital item from the general fund budget, the comp plan, the microsurfacing, the Lynn Drive culvert. What happened when I moved that over then, the comprehensive plan, there are some reserves there that can be used and they're a moderate amount, and then a moderate amount will be levied for it. So instead of levying the whole amount as we had in here, there's some reserves that can be used for that in this project budget here, and then a moderate amount to be levied for. The microsurfacing, there is some reserve balances here that can be used for about half of it, and we can levy for the rest of it. So that also helped decrease that. And the Lynn Drive culvert, if you look in the storm drain department and repairs and maintenance, again, according to the Appendix A, there are some reserves that can be used for that project, and about 3/4 of that project will now be included in the levy. So that is places I found in order to reduce the levy. The total governmental fund budget summary, that's your appendix C, that would be this paper. The projected fund balances are included there, and looking at your city's fund balance policies and the reservations you've already made. There's about $1.2 million that would be projected as unassigned fund balance in the general fund for 2026. And that's using the actual 2024 unassigned fund balance was $1.3 million. So I looked at that and I projected it forward. So if you look at the planned budget projects, that's appendix A. We do have some of that reserve to be moved from the general fund, or do we want some of that general fund to be moved to the capital fund? You did transfer $519,000 from the general fund in 2025 to the capital fund. But you also, you loan that $519,000 to the sewer fund for South Passage to be paid back over time. That's gonna show on your fund balance and it's gonna show as a due from other fund, but it's not cash. Where most times your fund balance is cash because we're doing governmental accounting accrual, modified accrual. Most of the time your fund balance is cash, not in your enterprise funds, but in your governmental funds. But you have to remember that that's a loan out there that's gonna be paid back over time. So that will not be, not all of that's gonna be available, about that 500,000. And then the last page I did is the levy impact, that's appendix D. That shows you the tax rate and the residential impacts on the proposed property, the proposed levy. So the levy increased over 2025 with all these changes that I was able to find some reserve fund balances and move some of this around. Now the levy increase would be 8.04%. The tax rate would be a 0% increase over 2025. The average market value increase on your residential property, according to the county, is 8.1%. And you remember that those market values were done last year. The ones done this year will be for the next year's levy. That impacts, the impacts on 88% of your residential homes is gonna be 8%, 8.7% or lower. As you can see by this sheet, I circled the highest amount of parcels that you have and all those underneath it, they all are less. So, and then the increase on the residential property is entirely from the market value increases and the fiscal disparity decrease. As it's the 0% is from the city's levy or budget. So I know that there's still some issues that are still waiting answers regarding specific items or projects and studies and funding. So I'm just gonna turn it back to the mayor to facilitate going through some of these questions and what you would like to have done.
Perfect. Thank you, Sue. All right, so we'll walk back, and so Sue did have some questions through these bullet points that she wants us to discuss and give her some direction on. And Sue, those are the boldface
Yep.
line items that you had called out here, right?
Yeah, these budget points or if it's bold.
Right. So walking back through to the beginning on the first page, attention to the projected reserves level should be noted when talking about the use of fund balances. That's certainly, you really have a question on that one, Sue?
Okay, first, let me see here. First, I think that you do need to look at this appendix A, because we didn't really look at those, and you can see where it's highlighted in yellow is the projected, that's the amount of the capital levy that's being put against each of these departments. The last page happens to be your the last page is your parks, which we don't have any levy proposed for that. That's coming from park dedication fees. But the rest of these, if it's in yellow, that's the part of the levy. And it shows you there the 2025, the part of the levy from 2025 that's going in there, and what the projected 2026 is. So I just said that you need to pay attention to the reserve levels when you look at this, because you can see I've projected what the end of the year reserve level is, and then what next year's is, and then I projected it out to 2030. Right, and I listed, on the left, what you had money put away for, and I started with 24 so that you could see what you were budgeting in 24, what actually happened in 24, what you budgeted in 25, what we're expecting to still happen in 25 or has already happened. And then what you're budgeting in 26, and then the 27 to 30 is what we had in that CIP plan. Either it was in here before. And it was in prior, it was in a prior year also. There are placeholders in here and you could move them, but when we talked about them, we moved some things out of 26 and just moved them into 27, 28, 29.
Right.
So we really didn't do anything with 27 to 30. So I didn't add anything new in 27 to 30. It's stuff you already had in there the prior two
Yeah.
years.
And I think your point, talking about a more in-depth capital improvement plan is not something we're gonna do tonight
Right.
or this, this budget season, but definitely having that, being able to start early next spring on that piece is very prudent. And having, staff have, the direction of building out the capital plan.
And I just wanted to say, looking at, you might want to, before you talk about using fund balances for anything, you might want to look at where these things are projecting out right now with what you have in there. Because I know there's things you don't have in there yet, like the fire truck, any city hall things, because you haven't had those discussions, or those type of things. None of that is in here yet. And then also that, your fund balance from the road and bridge was put into the general fund, and I did put the question there, is that something we want to change?
Yeah, I was just gonna ask that, so that is the question on the next page. So recommended, what would you recommend being the action there, Sue? To move that, to split it out or bring that back into a capital fund?
I would suggest to, because when I was looking at this, I went through some of these, but when you get to the second page and you look at your street improvement reserve, and you look at the projects that you have down there that have to be done, and a lot of these came from the condition on your streets that you had Shane look at. If you look at that, you can see that goes negative. And we don't even have the fire truck or any of that stuff in there yet, so, that could come out, the fire truck could very well come out of your equipment reserves too, but you have to look at, what you're doing in there too, and that's just what I would have recommended.
But then we're using that money that we taxed people for something that. I mean, next year, their 2027, it goes negative because of the sanitary sewer and water. So why would we have our residents be taxed for that when I thought it's just the benefiting properties that are going to pay for that? Along with grants, whatever grants we can get.
Which project are you talking about?
Talking about the reason why it goes negative, you mentioned negative in 2027, right? You said second page street improvements.
Mm-hmm.
Well, it goes negative because you got $800,000 of sanitary sewer in there. You got $500,000 of so water main. Actually, that's CSTS stuff, which I don't think that all the residents pay for that. So,
No, but
so my point is, why would I want all the taxpayers we've collected taxes for them to cover those expenditures?
it's not necessarily that they're going to all be putting in here. I put this in here because I didn't know where the funding was coming from, but you
Sure,
can see.
I'm not questioning that. I'm explaining why I would not be in favor of taking stuff out of the general.
But
fund.
if you could let me finish, please. If you notice, state bonds is $6.5 million, and the state bonds are supposed to pay for the lift station and that country court phase 1 and 2. And then there is a transfer in of $1 million. So I mean, there are other revenue sources up here. And then for that other one, there's other state bond proceeds that I figured in there too. I don't know for sure where all of it's coming from, but I believe that the more developments you take on, the more maintenance you're going to have. You can only add so many miles of street, and you take them on every time there's development. When it's done, they're dedicated back to you. So is the right of way, so is the stormwater. I mean, we have a lot of different things that we haven't gone through and ironed out yet where we're gonna go. If you look at the storm pond maintenance, the stormwater on the next page, there's 200,000 there, but we already know we're gonna take on the ditch, and we already know there's a few other ones that we're gonna have to take on. And even when we do,
If we decided we're taking on the ditch. We just assume we're taking it on.
For planning, I imagine you have to assume you're gonna take it on until it's otherwise. If you're trying to build out a legitimate plan.
And a budget, keep in mind, a budget is only good for one moment in time and tomorrow it could change. I mean, we're just doing the best we can with a budget, with the things that we know are coming and trying to build reserves or have reserves. Cause we don't know what's gonna happen, but that doesn't mean that it's set in stone and it doesn't mean for sure. I mean, as things come with a capital plan or any capital things, they always have to come to the city council and the city council has to approve them. They aren't like your operating budget where they're in there and you know that they're approved and they're going to be paid. Anything capital has to come to the council and be approved every single time we make an expenditure from that.
You also have to remember that half of the project in Country Court is the roads by themselves.
Right.
No, 60.
It has nothing to do with the sewer part. It's, yeah.
And the roads, usually when you assess them out, you assess 50% out and the other half comes from the city.
Right.
I think we're 60-40.
Well,
Yeah.
I'm still new.
Yeah, no, that's fine.
They're just things that, according to my professional opinion, I want to call your attention to. It's not for me to tell you what to do. I'm only giving you
Yeah.
from working in 5 or 6 different places and going through development and going through being a small town who, you know, had a whole bunch of development yet. You know, things that I've experienced before. They're just questions I am putting out there that you want to think about.
So then let's go back to talking about, do we want to track the capital improvement of the road piece, right? That's the question of the money that was moved from the road and bridge fund. And you're asking, do we want to move to split that and take some of it? Do you have like suggested amounts on that, or are we gonna move it all back, or what's your recommendation there, Sue?
Well, my recommendation would be to have if I had been here when that had been done. And I had been talking to others, I would have recommended that been transferred to your road and bridge fund because you had a fund
Like a road and
balance
bridge
there.
capital fund.
Yes,
Yeah,
into capital fund only because you had a healthy reserve balance. And if you take that transfer out, it is sort of back to where you always were. You know, you had enough to do your assign, you know, your cash flow. And in most cities, you have a very complicated fund balance policies that most cities don't have. So a lot of times your unassigned fund balance is usually what auditors or us finance directors are looking at, and we're saying, okay, what's that? You know, for cash flow purposes, we always try to make sure that what our unassigned fund balance is about, you know, 50% so that we can pay the next year's expenditures. And we always benchmark it at that. But I've taken that out already. And so that's why your fund balance jumped up. Because when I went back to your history before that happened, it was pretty much, you know, along your guidelines. But then when that transfer came in, it made it look twice as big.
sure. How much, what's the amount that you'd recommend?
I think, did I put it in here? Was it 1.2? I'd have to go back and look. I don't have it off the top of my head what the transfer was right now. But I can certainly bring that back to you.
I think that'd be a good thing to bring back to at a council meeting where we could make that decision.
I don't
With
think
a
it's fair to the
recommendation.
taxpayers to do that, but I really said.
Bill, it's all money that was already levied for
Well, we
road
levied it.
improvements.
We didn't levy it for these types of projects. We over expensed, we took more taxes in than what we paid out.
That was always the road and bridge fund, Bill, was always to
It was
fund road maintenance
and
needs
snow removal.
and capital.
And it was capital improvements.
We used it for capital improvements. So that's how we worked the plan so that we only needed to bond every 3 years during our road improvement process to, you know, fund the in-between years and fund part of it, so we didn't have to bond the entire amounts of those ones. So it was all of that mixed into one.
Do you have the paperwork, do you have the work papers that show that fund had more than just maintaining roads, like filling in potholes?
That's the very definition of the road and bridge fund. It is all it's the It's the road construction and road maintenance. So it was not just.
Shouldering, it was culvert repair,
It
it was
was
everything.
overlays, it was total reconstructs, it was everything. And that is how, and I did check with my husband, who is a finance director for a township, and I did call a couple other ones. And that's what the road and bridge is defined as.
Mhm.
And so that it's a mixture of, but in cities, you have your operating, separate from your capital improvement. Although many times we did put, you can't take the audit word for how you budget either, because many cities will put things that they're budgeting over a long, like in their long range plan, and they're putting things into their reserve fund. But if it doesn't meet the threshold, we only capitalize it as an asset if it meets the threshold level. And if it's under, we expense it. And if it's like maintenance purposes, and I did look back, I went all the way back to 2017 in your books, and you have expensed and not capitalized any seal coat or any of the microsurfacing. They've always been, and I went back to the audit work papers and I found that. So what we were saying is true. It's not that it wasn't in your capital reserve account, but it's not ever been put in your assets and it's not been capitalized. So it is an operating
Did you
expense.
talk to Shane about that? Because I talked to Shane about microservicing, and it's not done every year for every road.
Correct,
It extends the life multiple years of the road.
correct,
And it's a significant expense to our city.
correct.
So to me, that defines a capital.
But
project.
that's not for accounting purposes how it's normally done. And you could talk to any auditor and they will, I looked through our audit work papers, we have never capitalized it. And in most cities I've been in, they have not capitalized seal coating. It's always been a maintenance item. But we do put it in our capital plans so that we know and we're doing it, because there's only a certain section of roads, or we look at what the road condition is before we decide when it's gonna need that. So it's kind of like, if you had a development or you had an apartment complex, or if you had an HOA and you had a number of things and you were looking, you wouldn't re-roof wouldn't re-roof all the roofs all the time. You do them when they needed it. And that's sort of like what the road is. It's not really increasing the value of the house if you put a new roof on it. But it's the same thing with the road. It's not increasing the value of the road where overlay will be, because you're actually cutting off the top and you're milling down and then you're putting more stuff on it. That's actually different, that and a reconstruct. So that's just how it's been in the 28 years that I've worked in it, and I've worked at the GFOA level too, and that is how most cities do it. Reporting and how things show up on an audit statement is not the same as budgeting. And the standards are not the same for it. The standards are black and white for how we have to report it, because we have to report certain things in there and then try to get to GASB 34. GASB 34 is all about just taking our fund statements and putting them in the government-wide statements so that the financial markets can compare us to somebody else, because they had a hard time understanding how our financial statements worked before that point in time. Because when I came into government, we did not have GASB 34 and we only had fund statements. And so that's why it's different than budgeting. And even at the GASB level, when I sat on the expert committees, so the financial reporting committee, I was a member of that for 6 years and worked with GASB and with the AICPAs. And they wanted in their standard to change GASB so that we had to come up with reporting standards for budgets. And it came out of there that it was not recommended, the cost benefit wasn't going to work, and it wasn't going to work because there are so many different ways to budget that it's not apples to apples with reporting. And so they abandoned that project in GASB also.
Okay. So let's move to the next bullet point. So we talk about should we be looking at encumbering funds after the end of the year for project expenses we've already levied for that were delayed or budgeted? And what's your recommendation there?
I think we should look at that. I think after we get done with next year's audit, I think we should go back and look at some of that. So when we're talking about the capital budget and then we get in the operating budget, if we had funds and we didn't spend it this year and we do a budget adjustment and move that over after we know what our audit balances are and what money we have left over, that then we wouldn't have to budget again if we moved it, because I could see that if you didn't spend it one year, you had your overage, you know, and it added to your fund balance. But then the next year you'd put it in again because you didn't do it this year and you knew we were gonna have to do it next year. Where if we encumbered it and we moved it over and did a budget adjustment for it, we already levied for it, it would be used for it, but we're not levying again, and then it's not adding to the fund balance then.
Sure.
Yeah.
That makes sense. Is that a policy thing then, Sue, that you need to bring back?
No, not necessarily. When we get to the end of the year, when the audit is done, after the audit's done, I know what the balances are. What I used to do in the other city is we looked at if there was any places, we would look at what the actual was. Which we knew after the audit adjustments were done, and then we would look at what the budgeted amount was, and we would know what the difference is, and then we would write that up if we thought it needed to be. If we needed those funds for something, we would come back and ask the council to do a budget adjustment. So we would do a budget adjustment, but when we started next year's budget, we would still compare the original budget to the new budget. So, and then know that, you know,
Sure.
like you wouldn't have to budget for that because you've already got it in there, so you knew it was in there. And you had a budget adjustment there, and then you added the cost in, then when you did the budget adjustment. And that way you're using those funds for what they were levied for and what you budgeted for. And if it moved from one year to the next, then you're not adding to it, and it's not really, your fund balance might go up, but that fund balance would then be reserved for those encumbered uses. So then you're not levying for it twice.
So Bill, can you help me understand why that's such a concern? I'm missing why you're concerned.
We had a very large reserve in the road and bridge fund.
Yep.
But according to the annual report, which I had to rely on because I wasn't on the council and I haven't seen the work papers. The annual report said it was for maintenance and snow removal. So my understanding was over the years, the 10 or 20, 30 years, we built that up. And because we budgeted more than what we paid. So last year, the snow, we only paid $50,000, but we budgeted 100. So we built up a reserve at 50,000. Well, that's grown over time. My preference is give that money back to the taxpayers, then taking that reserve, that money that it's sitting in our bank account, that cash that we collected, and using it for some of these other projects that were never known at the time, to benefit future residents of the city. We're taking taxes we collected from current residents and going to benefit the future residents. And I didn't think that was right.
Gotcha.
So that's just.
But if it stays in the same balance, it can only be used for roads.
If it stays in the general fund, it can be used for, we collapsed the road and bridge fund.
But I think that was Sue's statement is let's move it back to the road, to the road.
To dedicate it to the capital. Right.
Yeah.
We don't have a road and bridge fund anymore.
We have the street.
We
fund, right?
have,
You have it reserved though. Everything in every fund except your general fund is reserved for some purpose. And it, yes.
Yeah.
And the council would have to decide if they want to use it for a different purpose. And I looked back all the way, I was back in the 16 and 17, and I looked, and your road and bridge fund had always been over budgeted because of the reason that the mayor was talking about, because you bonded every 2 years, and that's not uncommon in most cities I've been in, like Arden Hills, we got to the point where we never had bond. But we had a dedicated $200,000 budget transfer from the general fund into that capital reserve fund. And so we always looked at, okay, we were gonna do about $1 million in road projects that year. And so, and then between the assessments and what we would have to pay, that's how we kept that, and we didn't have to bond. And so that's basically what you were doing, because I looked, and that is, the general fund was always lower, like 38%, you know, 40%, but the road and bridge fund was always budgeted because it would go down then when you had a construction project. And the only reason I think that I found notes in 2024, and I don't think you were on the council yet then, so what happened is they had noted that for 3 years, their capital levy had gone down to like 150,000, but it had always historically been 400,000. And I think that's because when Shane talked about how you chose to defer 2 or 3 years and not do any microsurfacing, they lowered it those 3 years to wait to see if it was going to work. And so that's, I think, how your fund, because it was about $1.4 million that was sitting there. And I said, well, that would make sense if you didn't do any microsurfacing projects and you were waiting and you had lowered the levy, because you didn't levy anymore during those years either, knowing that you were waiting. And so I noticed that when it went back up again in 2024, there was a note in the 2024 file that it had always been at that level. But for those 3 years, you had put it down because you didn't know what you were going to do yet. So that money had always been reserved. And it to me, it would have been in the road projects. Because that's what it was being, because the operating part of it had been used every year, except for snow. But, you know, I've seen snowplow budgets wiped out in January, and I've seen them where we thought we were gonna have excess, and then December, all of a sudden, we had a whole bunch Christmas week, and so all of a sudden it was wiped out again. So, I mean, that is about the only thing. Otherwise, you have used the operating piece of the road and bridge fund every year. It was the capital piece that you were building up.
Mhm.
And, you know, not having, you know, I could see that you bonded, like, what was it 2015, 2018, 2021? And so basically that is probably what you were doing now that you have said that, because I noticed that.
That goes back to Sarah set that all up,
Yeah.
when we put this, when we put that plan together back starting in 2008. That was even a little bit before Sarah's time, but they started, you know, budgeting that capital fund like that in order to keep the
Yeah,
levy
we came to
level
the annual
over
meetings.
the time. Yep.
That was,
We were
the whole
doing-
thing was just, it was a responsible way to do it,
Mhm.
to spread it out so that we weren't all of a sudden
You didn't spike the
having a
levy.
big spike.
Yep.
Yeah.
And I did find that when I looked at all the presentations of the levy, those things were noted in there, and that's where I found some of the historical data on it. Now, getting to your point, the last 2 years, you haven't had any stable staff, you haven't had people who had any of the history, you hadn't had people around to tell, and the auditors, I could see where they had questions when I was looking through their stuff, they were asking questions, and all they knew is what they could find out from current staff. But they didn't really know why either, because there was questions all over the place. What is this for? Where did this come from? So I mean, they were guessing, and I know from working at an audit firm for 7 months and then going back that the auditors, they know reporting really well, but they don't always understand how your budgets were put together, and they don't always understand how we have to do the levies and things like that. They know how to do the reporting, but they don't know the bookkeeping. And so I saw notes in a lot of different places and emails going back and forth where they were trying to ascertain where some of this stuff was from. But I had a hard time too, because when I was looking in there, the files, every person has done their stuff different. Some things I've been finding in emails because I found a lot of PDF, you know, copies. I went back to presentations that you had done, because your meetings used to be in March at the beginning of the year where you set your levy, you know, and then we moved over. And I just think that part of your problem is that there has been so much turnover. You're already on your second of every office we have in here, and it's been 24 and 25. And I think that's where, you know, things went back. I went all the way back, like I said, to 2020, 21. But I started going back farther, and that's where I found some of the history on how your stuff was being done. And it's consistent with how we have it laid out now. But I did see, because I noticed the road and bridge fund, and I said, I realized that was really the capital piece that was
Mhm.
sitting in there building up.
And back to the microsurfacing, we did seal coating.
Yeah.
That before that, and that wasn't holding up, and then the
Right.
microsurfacing was starting, so that's what we held off this.
Right.
Those
So,
years.
so is it true that we weren't doing microsurfacing or seal coating for multiple years?
Yeah.
Mhm.
Yes, because it wasn't holding up.
There was a problem, and this is what has happened to the roads in
With
the
the
Casey's edition, is that the seal coating
Delaminate.
process caused it to delaminate and was actually deteriorating the bituminous faster than it was, you know, there was no benefit. It was deteriorating it faster. And this was something that was being seen around the state. Shane has talked about it many times. There's MinDOT studies
Shane's on
on
the
it.
state board.
Right, and so he recommended we pause that program.
What year was that we paused it?
I can't don't remember off the top of my head.
Last 5 years?
He said there was 2 or 3 years where he didn't budget, and I'm assuming that's probably the 2 or 3 years
Yeah,
that
we did, I
the
think,
21, 22, and 23, when your levy for capital went
and then we
down.
did the first,
So I turned that off.
That's a good song.
a good one. But
Man, we won't turn that.
let's shut mine off. The process, we pushed pause on it for a little bit. Then Shane recommended we try the microsurfacing, so we did one neighborhood, Deer Run Court,
Camp Pheasant Ridge.
Pheasant Ridge, right?
Yep.
And then we said, now let's see how that works, before we do any more. And so then we, pushed pause, and then now we are trying to catch back up with all the roads that didn't get touched in between.
Right. In the capital.
Which also shows an increase.
That's why there's 2 years of really big
Yeah,
microservice.
so put it back on.
Correct.
And that's where I think that's why that fund balance, creeps up to,
Yeah.
part of it too.
Mhm.
And I think that that's why when Shane said it was 2 or 3 years that we held off,
Mhm.
and that was the 2 or 3 years that your capital levy was lower.
Yeah.
And then it went back up, and I saw the notes for the 2024 where it went back up, because it's 2024 when you tried the microsurfacing. Which is probably why it went back up, because I found a note in there that said historically it has always been at this level. 2020 and before, it was those 3 years in there, and I'm pretty certain that's probably why the levy went down. Cause there wasn't anything in there for that. But it would have been the capital piece.
Okay. So is there any questions on the second bullet point we just talked about with the encumbering the funds at the end of the year?
No,
Just a comment.
no.
So we're gonna approve a final budget in December, if I understood you right, we'll approve final budget. Then after the audit, what you're saying is that we have an adjusted final budget.
Then we'd have a budget amendments, yeah, and we'd have an adjusted budget.
I hate adjusted budgets, just explain to the public why we were off on our budget assumptions as opposed to having an adjusted budget, because now I have a whole nother set of numbers I have to have in my head.
Yeah, but when we start the budget process the next year, we wouldn't use the adjusted budget, we would only use the original budget. To compare them. But we're doing, because
It's gonna show up in the annual, will it be the adjusted budget or will it be?
it'll show both. We're required to show both. And I have always, if there's something unusual and it's large, I mean, we have to, and I think the GASB standard is coming now, where we have to explain all our variances anyway.
Yes, so we haven't in the past used an adjusted budget in our financial statements, correct?
No, but I am, well,
I haven't seen it.
it's going to be in there, it doesn't matter, because the new GASB standard is saying that we have to, there's one coming. If it isn't already in effect, there is a GASB standard, it's gonna say that we have to show final budget, adjusted budget, actual. So regardless of whether you change or not, we're gonna have to put the 2 columns in the financial report. But if we know that we're gonna encumber funds, and when we're looking as a staff or we're looking as a council and we know what the budget number is. And we decide we're gonna encumber it when the project comes up and we get bids for it, and we know that, this is how much it's gonna cost, we know that the money is there. It just makes better financial sense, and it's better oversight, if you do budget adjustments.
Mhm.
I mean, for little things here or there, I don't adjust the budget, I never have. It's just if it's known things that we're going to do that we didn't spend, on their bigger dollar amounts, yeah, I have never been one. I have seen people who go and adjust their entire budget to match what their actual is, which I think is dumb.
Right.
I don't agree with that at all, and I only do it if I know that there's things that we actually know we're gonna do that actually weren't budgeted for, or things that got carried over that we know we're gonna spend and we didn't wanna levy it again. That, then I would suggest that we budget them, but no, I'm not in favor of changing every line item to be actual. That to me is, that does a disservice to.
So Sue, you don't think residents, if we tell them, here's our budgeted levy. And here's our budget, here's what we're committing to doing next year. And then we go and change it. You don't think residents don't get upset, say, no, this is your budget, manage to your budget. I'm used to managing to a budget, so if we underestimate, overestimate something in our final budget, we have to find a way that year then to live with what we committed to the residents, not, well, yeah, here's our final budget, but you know what, if something comes up, we're just gonna change it. And do you know what I mean?
If you're what we're adjusting the budget to is for known things that we already had in our fund balance that we're going to use it for. If we had planned $50,000 this year to do city hall repairs and we didn't do the repairs, but we know we're gonna do them next year, but we already had it in the budget this year and levied for it.
We wouldn't levy for it in the next year's budget.
Right,
That's one
we
example.
wouldn't levy for it in the next year's budget, but then we would make a budget adjustment to carry over that money for that line item because we had the 50,000 to spend because we previously budgeted. That's what encumbered, when you encumber it, the state uses encumbrances all the time. That means that money is spoken for.
I understand that concept, I just don't understand why we would change a budget. I understand that, the next year we wouldn't levy for it because it's already sitting in our bank account, we already.
But it is.
If you change your budget and you know that you're going to spend it, then when you're looking at your
Then you.
budget to actuals, you don't see this big amount off that you keep explaining all the time because you explained it when you made the budget adjustment.
Right.
So now you know that, yeah, that's within
So we're trying
budget.
to not explain what.
The budget adjustments would,
I'm not in favor of doing adjusted.
the
budgets.
budget adjustments would be brought to a city council meeting with them all explain exactly what they're for and what money is being carried over for. If nobody has a reason for it, then we don't do a budget adjustment.
Okay, and this will happen next year after the audit stuff.
Yeah, I always waited because I wanted to make sure, because we're not gonna encumber any money. You can only encumber if there's only leftover budget from your line item to start with.
So
And it's a way to get back to you. It's a way of using a fund balance when you over budgeted the year before for items that come up. So in a way, it's,
Reconciling it.
yes.
So did I answer your question satisfactory?
Yeah, but now my next question, why you're so opposed to that one, because it doesn't make sense to me, because it seems like we're saying we allocated it. Now we're encumbering it so that we don't have to.
Levy for it
levy
again.
for it for next year.
Mhm.
So it's basically just saying, hey, we budgeted this, we levied for it, and now we're putting it
Or
over
were
here, so
you-
next
But
year.
the
we don't-
So were you more disagreeing with the change in the budget?
I'm
The
just
adjustment.
moving it out of general fund and into the capital fund because.
Well, we're talking about two different things, though,
Okay.
right? So I think Abe is.
First one, yeah.
Yeah, we talked about that piece. I think Abe is now asking you about the encumbering part. Of why you would disagree with that piece. If we got levy for something,
I don't have.
but we don't do it,
Right, I don't have.
so it's
setting
not
aside
that, it's the
reserve-
budget adjustment that
It's
you
having
can.
a column, another column that says adjusted budget. Because. I'm used to having one budget. And you manage to it, you don't adjust your budget during the course of a year. And I know governments do this all the time. I mean, the school district does it all the time. I mean, I used to look at their budgets too. They have an adjusted budget and they're always really close to budget. At the end of the year, they're really close to adjusted budget because they changed their budget all throughout the year because, well, we didn't think about this. Okay, we're gonna add expenses, so it doesn't look like it's so far off and then they don't have to explain it. So my preference is just having a final budget and then making the explanations. If we're over budget, we're under budget. And then to reserve it for the next, so we don't budget it again next year. We encumber.
But I'm hearing we're not changing budget if we're under budget, it's just if we're not spending what we allocated for. with encumbrance.
I
Is
think
that
it
what
can
I'm
work
hearing?
both ways.
Yeah, but I don't see an instance of where we're doing that, you know,
Okay.
the bad part of what you're trying to explain.
Okay,
So I don't see where we're doing that. We're
Okay.
just saying, what we're saying is. If there's money that's been set aside for something to do.
Yep.
It's been levied. We didn't get to it this year.
yes,
It goes to next year,
yes.
but we don't levy for it again, but it is in the budget because we're gonna spend it,
It's in next year's budget.
but it's not
But
levied.
but I think,
As a reserve.
I think though, Jay, that,
Yeah.
I think that, and I think Bill said that he,
Right,
he's okay with that piece of it, right? It's the,
yeah,
it's the budget adjustment piece that
In the
we're
current
talking
year.
about,
In the
right?
current year.
And again, you know, I think Bill, what I heard Sue say is that these are one by taking case by case scenarios so that we can act upon those as staff we bring them forward. Is that correct, Sue? So
yeah,
it's
I'm not.
this isn't just a
for
blanket.
Coming up with.
It's not just a
blanket.
blanket statement.
Yeah.
To say we're just gonna automatically adjust our budget, right? It's a, if the case comes up where we need to make an adjustment. And it sounds like that the standards will be in a spot where, you know, they're gonna require those things anyways.
Well,
So-
and budget adjustments have to come to the city council.
Mhm.
And so, but you don't wanna be looking, going, oh, okay, you know, here, you know, we're off 50,000, you know, we don't have money to spend. Well, yeah, we did. We had money we didn't spend last year. We're making a budget adjustment. So, yeah, I mean, we're just moving the budget from one year to the next.
Yeah,
We've done that at road projects, Bill. We haven't did them that year and we pushed them out to next year to add them onto something else.
Yeah,
It's
that's
there.
there. I don't have a problem with that.
Mhm.
So,
yeah.
let's just, yeah, we could drop it.
It's the other way
We're-
around, which I agree also.
I just don't want us to forget about $100,000 expenditure. And just change the budget so we can cover that $100,000 and we won't show a variance. That's my concern.
No, I
It makes
understand.
it
Yeah,
easy-
yeah.
It makes it easy to change your budget and then
Right.
you look good because you're.
Yeah, and again, you know, I think the budget, you know, given that the budget adjustments would be one-off cases or, you know,
Right.
scenarios where.
Yeah.
If that's coming up, Sue would have to come to the council
Yeah.
and talk that through. We'll have that opportunity at the time to understand the circumstances of it and decide whether or not we want to do that, right? Does that make sense?
Yeah.
Okay. Get that one?
Yep.
Understood? Good.
Yep.
Cool, all right. So in the budget summary piece then, staff is recommending, you know, again, using some of the past, again, Sue, tell me if I get this right, some of the past, you know, reserves from what was the road and bridge fund to help fund next year's projects, correct?
Correct. And that's why I said it really, when you look at the projected estimated fund balance of $3 million. About half of that came from your road and bridge fund that was probably set aside for capital projects. It just makes sense if you move that to the capital projects, then it doesn't look as out of line as it did before you folded the road, you know, before your road and bridge fund went away,
Mm-hmm.
because that's where it was.
What capital projects though did we levy for that we didn't do? Do we have documentation that shows what those projects were?
Part of what you were doing was levying that $400,000 every
54,
year.
yeah.
Because you were saving money up because you knew you were gonna have to do road projects and you were gonna have to bond. And the city pays for whatever percentage, is it 40%
60.
or 60%?
64.
And so that they wouldn't have to bond as much because your bonded debt then also goes on to tax levy.
I know, I understand, but my question is there a list of projects that we never did and that's how the reserve?
Well, the reserve
It-
is because of the microsurfacing and the seal coating, I believe.
I think there was.
Some of it.
Again, also, it was always because we know what projects are upcoming, so there was always the goal in mind to keep the
So
fund
we were,
at a certain
and that
level.
makes sense, so we're just levying because we thought we were gonna do something someday.
Well,
We usually
Not
have,
thought.
100,
it wasn't thought, Bill.
we usually have
It's the-
$120,000 in patching,
Right.
to
Yeah.
get ready to
But I
make the
don't-
surface.
And then, you know, in the
It's-
capital plan, always
Planning
had,
ahead a couple
you know,
years.
the judicial mill and overlay, the
Yeah.
Longview Lane project, you know, Country Court roads, we still have Casey's Edition roads that need to be done, you know, so the capital improvement plan laid out from, and changed it this this goes back to
2008.
well, that's 2008 when we started it, so
Yeah.
I mean, it was probably built in 2005
Right.
of. Here's the roads over the next 20 some years that we know are gonna have to be done. The estimated cost, so then that's when the finance people at the time and into Sarah, really built out and understood to keep the levy level. As level as possible, we'll levy this much every year for capital improvement stuff.
So to answer my question, we don't have a list of projects that we budgeted for, we levied for, but we never did.
Right.
That's how it built up.
No.
We don't have that.
We don't have.
Well, it was a longer
It's-
plan where
I
they
mean-
knew what was going to have to be done, and what they did is look at what had to be done and how can we budget it so it's more level every year, and so that's why they levied it, because they knew that those reserves were going to go towards those future projects, and that's the CIP that they're talking about that was developed in 2008.
So
Over every
Bill,
5 years.
the one project
They
that
added-
did get punted, that didn't get done was the Longview Lane
So we were.
one. That's the only one.
5 years
We punted
building that up.
Tower and Oaks, but we've since redone
Otherwise.
that. That one didn't happen when it was supposed to happen, happened 2 years later. Because the residents didn't want it done, then they all moved away, the next residents that moved in, had a fit that the road was breaking up, and
Yeah.
so then they were like, get it done, so.
Fix it.
Longview Lane was the only one,
Would Longview Lane though be in the capital improvement fund, not in the road and bridge fund?
No.
Because the
At
capital
the
improvement
time, it
fund
was
is
the same.
very large, I mean, the capital.
At the
improvement
time,
fund
it was
is
the
$2 million in it.
Yeah.
Or a million.
at the time, it was the same, at the time, when the capital plan was built, it was the same fund, right, the road and bridge fund.
But
Was the-
township.
I thought. Capital fund is 401, and I thought the road and bridge fund was like 201.
But there was no capital fund at that point in
No,
time.
or there was.
There was
yeah,
only,
a
there
road
was
and bridge
only
fund.
the road and bridge fund.
4 years ago, we started that. Different funds, Bill.
I'm gonna shut up because I'm not understanding it. And I've done something, you get to a point where it's like, let's move on.
But
So-
In my opinion, let's put it back in the capital fund so that we
Mhm.
can use those dollars. So
Yeah.
that we don't have to levy for it. And we can effectively draw down our.
Level it out.
balance.
Right,
Mhm.
and,
Even right
and,
now, it can't, but it's in capital.
right, and I think that's why I
Yeah.
suggested next year in April that we start and we go, okay, what are the things and get, like. We only have to adopt a 5-year plan, but I usually go out and I work with them to do a 10-year plan. So
Mhm.
we kind of know what's coming down the road. And then we go, okay, we know all of these projects are gonna be done, how are we gonna pay for it? So then it's like, okay, what can we get grants for? What, there's gonna have to be matches for that, then we go, what can be in the bonding, if, this won't be done unless we, get. In the state bonding, then there's, okay, we're gonna have to bond for this, and then you kind of figure out, okay, what should we be levying to try to keep it constant, and that's kind of how that got there.
got all balled up, Bill, when these funds started, when we became a city.
Well, yeah,
From
there
the
was,
township to the-
And then the inconsistencies with staff, and there's,
Yeah.
a number of reasons why things kind of got.
Well, and I saw that things were, that
That
in interim 2 years in there, people were looking and doing things different based on different philosophies, and I don't think it was always. I went back and I started
Yeah.
looking at how things are done before, which is why I changed some of this stuff. Because I started understanding how the things had started being done, and so then I tried to put it back in that order, and that's why I said. Next year, I think we need to start there, because then we have a base. And we know where we're going and what we're gonna need, and then we can figure out how we can pay for it.
Right.
So.
Because, sorry, go ahead.
I'm sorry.
No, go ahead. Bill.
So on page 2, so on this, so if we move 1 million, or whatever the number is. Whatever the road and bridge amount. Can we take the 215 in the yellow allocated levy and drop that 100,000 to 115 to lower the levy for the year? Since we have all that money now sitting in this, which would be transferred in. Because the microsurfacing is $454,000 versus 173. My other recommendation was, well, I already made it last month, but was to reduce the 454, do less roads. Such a large increase. But if you want to do all those roads, then take 215 down to 115, lower the levy by 100,000 there. Because we're gonna move money from where to transfer out of the general fund into this account.
All right, so my thoughts on it are, as far as doing less roads, I think we just explained that we went through a period where we did less roads. We actually have to do a little bit of catching up, and our engineer is kind of, you know, we've had a program, we've had a program with this thing that started, you know, quite a while back, and it's worked really well. And that's one of the things I've been really happy with as a resident of Credit River. That we just, you know, that we did that we've been doing capital maintenance on all the streets and roads, and they've improved. Our, you know, our road inventory has definitely improved. And we seem to have you know, we've evened it out. So, you know, with that, I'd like to see us do that with other things like storm sewer, ponds, culverts, and everything else that we haven't, because we haven't started that yet. But my concern would be, going back to that point, is that we would do, I don't think we should be doing less when our engineer is expecting us to get back on our schedule with this thing. So, you know, I think it's important, you know, my only question would be, you know, with the 454, are we doing enough of it to catch up? Or should we be thinking about other, you know?
But if you look at the subsequent
I think we're
years,
good.
Jay, if you look at the subsequent years, it's 454, and then it's
Then
300,
370,
370,
and
335,
335,
and 421, right? So it doesn't really significantly drop after
Right.
26.
So if
right?
we were gonna
'Cause
drop it,
it's a regular
Yeah.
maintenance plan that just rotates around
Yeah.
roads in the city.
and some of these are not, you know, they're designed because the different neighborhoods that are getting them, or clusters of streets, are different prices. You know, there's more scope in one. You
Mhm.
can't just say, hey, we're gonna do 375,000
Yeah.
each year, you know,
What Shane tends to try to do is to cluster them together.
in order to get the best
Because
price.
otherwise you're, you know, if you're,
Needs a scale.
Yeah.
exactly, if you're
Yeah.
doing, hey, do a quarter mile on the north end of the city, but then don't do a half mile
Right.
on the southern end, then
Instead-
you get
instead
people
of-
going back
instead
and
of
forth.
people-
Setup fee
Right.
and it gets more expensive. The other thing I want to caution you on is you didn't really do a capital plan this year, and so
Mhm.
this is 2 years old. We
Yep.
don't even know for sure what other roads and what other projects, even our fire truck isn't in here yet.
Right.
And you know that you're gonna have, because we've been talking about stormwater and how we're even gonna pay for that. And it's like, well, maybe you reallocate how this levy is,
Mhm.
but because, you know, there's so many unknowns yet, we don't have a good
Well,
base
what a
yet.
great segue, because I do want to talk about, at some point, I want tonight and these other meetings, I want to talk about storm sewers. I want to talk about the culverts. I want to talk about basically the holding ponds and everything else. And I want to talk about making sure that we smooth out the budget on the fire truck, because it's an expense that we know is coming. And we should just, you know, we should just kick it out each year until we have it paid for, or pay for it early and save some interest.
And then that's why I said, I think we really need to, that's why I said I would be cautious about using fund balance or changing some of this right now, because we don't know
Yeah.
what we don't have in here yet. And that's why I think that we should start our process in April. You know,
Yeah.
come up with a calendar in April and get our meeting scheduled, and then May and June, we work really hard on trying to figure out what we want, what we think's gonna come, you know, that gives Shane time to go through, and then we can discuss with you what needs to be done, you know, where he sees the problems, and then we can figure out, you know, come back and figure out a financing plan, and then we know what reserves, what we have going on, you know, before we go into the operating budget.
Yeah, I personally would like to go through this stuff. I don't want to just arbitrarily pick a number out and say, hey, let's just cut this out. I would much rather, I mean, the responsible way of doing this is to go through it and see, make sure that we have the costs covered. And if there's something that we don't need, then let's take it out of that line item. And if there's something else that we have to look at, and I'm also concerned about the cost of tree removal. And we're over budget this year. And we haven't really changed enough with that. We haven't addressed that yet. That's something else that we need to be looking at to make sure that we've got enough money to cover that. Because we know that the trees have been dying, and we know that we've got to take them out. We've got a park full of them that needs to be cleaned out, and that's not gonna come out of the park fund.
Right, because park fund can only be used for
Yeah,
capital.
Right.
Right,
It can't be
No,
used for
park fund is
maintenance.
a capital. It can't be used for me.
Right, it
Right.
can't be used for
Yeah.
maintenance,
Right.
and that, they would consider that
That's
maintenance.
and we've talked about park improvements, but we know that we have money in the park fund and the capital that we can use, so we obviously don't need to levy for that,
Right.
so.
So question regarding the 519-140, the CSTS to South Passage.
Mhm.
Shouldn't we be collecting about $35,000 every year for the next 15 years?
Is that?
Yeah, and I don't have that worked into here
Okay.
yet.
So I would recommend, to Bill's point, I would say let's decrease it by $35,000, the 215. And then we're
Well,
in
that,
net, no,
that or can we show it? Can we show
Well-
the income for it? You know, that.
yeah, let's
So
show it
off-
and decrease.
rather than just decreasing the amount, I mean, let's be transparent and say, we have an income,
Revenue in.
a revenue in, and put that in with that.
Well, but then we're also gonna be putting $1 million into this fund. So every one of these numbers up to 2030 is gonna be $1 million difference.
It is, but I don't know what we don't have in there yet, because no, this is 2 years old of the estimates, and Shane has not had time to go through and try to figure everything out, so we don't have everything
we-
in here that should be in here.
Should we at least try to figure an inflationary escalator? And just say, okay, you know, if we just did, without knowing what Shane's got in the thing, and I don't think that Shane's gonna get it to us by December. Maybe he will, but, should we just at least figure out, you know, if it's 2 years old, figure 2 years worth of inflation on it,
You could,
just, and just put a side note on that.
yeah,
I mean, that would be the responsible way to, I think, to do it.
You mean in these
Keep in
numbers?
mind as well that, you know, right now we have budgeted in 2028 for a significantly large road project. That.
Yeah.
You know, if we continue to levy at the rate, we're still gonna have a large bonding and a large interest, you know, debt service after that. Million.
I like David's idea. So Sue, did you take that down?
Inflationary numbers?
No. The 35,000, we're gonna be collecting principal and interest from the CSTS for the 519 that we loaned them.
Yeah, I
Can
didn't,
we offset some of those? We reduce the levy by whatever amount we collect. And I know it's not cash. But it's using,
Right.
you're used to it. So can you look into that?
we can, if you can reduce the levy if that's the direction from the council.
Otherwise, where's?
Or do you want to reallocate it, that part of the levy, we can reduce it here, do you want to reallocate that to your stormwater or somewhere, or equipment to pay for the fire truck, I mean.
Well, I think,
No, I'd rather not, cause that gets to where we were before. You know, when we
It
were,
came out of the.
when it was going to here, from here to there, I
It's
don't.
all in the capital fund.
Yeah,
that's what
I understand it's still in the capital fund, but there's still line items and,
Mhm.
you know, so I don't like the idea of just saying, well, we've got some extra, we'll just put it over here. I would rather see it. Let's have, if anything, let's recognize the income on it to offset the cost
Which
rather
category
than
do you
just say-
put the income recognized into,
In the
because.
same
in the same
Yeah.
place,
401.
in the same place
It's
that,
401, but this whole thing is 401.
Street
Street
improvements.
improvements.
Speed improvements,
There's
Yeah.
X's at the end.
Okay, then here's what I propose, and let's
Okay.
not bicker about the 35,000, let's go to the equipment, our
Yeah.
public works equipment, and let's just slash the 115-162. Cause we've identified that we don't need plow trucks in the next 3 years,
yes.
and let's
We
let's
levied
address that next year.
185 this year. What are we doing with that? You know, it's. I agree, slash that, 100, all
well,
of it.
what there was talk at the last meeting of paying for the fire truck, you can pay for the fire truck out of this capital, because it's
Yeah.
capital, it doesn't have to go out of your operating. Because in my other cities where we contracted, when they came up with a fire truck and they came up with squad cars, we took it out of our capital reserves for equipment rather than putting it in our operating levy.
Did you own the truck or was it?
We do
No,
own, we do own. a
We
piece of that.
contracted, when I was in Iron Hills, we contracted from Lake Johanna, we contracted
Sweet contract.
police from from Ramsey County, so it was exactly what you're doing here.
Okay.
But when they split it apart, when they billed us, we knew how much was capital and we knew how much was fire contract. And the capital piece, we took out of our capital reserves.
That makes sense. Because contractually, we own a
So we're-
percentage. of the-
Or it was for, and the
Thank you.
auditors
Thank
were
you.
fine with that because we
Sure,
used it
then.
for public safety capital.
So you're saying take the 115, 162 that was in public works equipment, and put on the next page, public safety.
Or it stays, well, I mean, you could, right?
Well,
You
it's
could
equipment.
say it's equipment, though. You could just leave it in the same. You could leave it the same
Earmark
piece.
things for what it really is, I mean, it's not.
Yeah.
But that, but we find, we can,
Down in budgeted
add that in
project
there.
expenses and we could say fire truck.
you can actually put it in there.
And it doesn't have to be public works equipment. In my other cities, we just had equipment and then we'd have
Mhm.
the different departments where we were paying for equipment.
I just think the more,
The more simple we make it,
Transparent.
yeah,
transparent.
And that's fine, Abe. I think we just add it as a budgeted project and equipment, then you're not moving that whole fund.
You just add down fire truck.
Sure, budgeted project expenditures and then,
Yeah.
Mhm.
fire truck.
And these
then-
titles came from what Eric put together. This
Correct.
is not, I mean,
Yeah.
you're not
Yeah.
bound to these titles. I
I
just
think
use
they came
it
back
as a
from,
starting.
Actually, these
They
came back from Kathy.
Well, okay, but I didn't know where they came
Yeah.
from, but when I'm trying to put together, I pulled these as a starting point
Mhm.
because. I wanted to say, these are the things that you guys have been looking at, but it's not really been updated.
Mhm.
Right.
So that's the only reason I said I would be cautious. Because I don't know what's not in here yet, and we don't have that base, and we haven't had that discussion yet. But we could easily just call this equipment, because that's what I had in
There.
is equipment
change.
reserve.
oh. Levi's got it fixed.
What'd you do?
He wrote on this
Wrote
paper,
fire truck.
fire truck.
Well, that's what I was
Actually,
thinking about.
that would be, that
That's what Susan.
would be,
Well, I did
that would
too.
be good, I think.
It's a
if we're at-
$300,000 hit that we could cover out of that piece pretty quickly.
Yeah, if we're at it, let's just take the 2028, $250,000 for the plow truck off.
Yep,
And let's just, I mean, we're here, let's just get rid of those.
sure.
We don't need
Funds?
those 2028, 2029. We don't need the 250 and the 330.
All three of them,
Plow truck.
Right,
all three of them.
Yeah.
You could maybe leave the 30. I
Yeah,
mean, that's 5 years out.
and the
That's
contract
fine.
is done with Bill by then, so.
His is done in 3 years.
well, there's a 1-year extension on it.
So take it out of 28 and 29,
Yeah,
Yeah.
and then put the fire truck in there.
Mhm.
yeah,
Yep.
the fire trucks.
How much is the fire truck?
340,000,
Well, paid
Let's
for
see.
that.
if I remember.
349.
349. Thank you, Steve.
Welcome.
What do we get anyway with that fire truck? Is it, what kind of truck is it and why do we need it? And can we tell them not to use it for our fires? Because isn't it a ladder truck that it's supposed to handle like 5 stories or three,
Yeah,
more than 3? We
there's-
don't have 3-story.
Well, there was
But
all
they-
of
The
those
houses in your neighborhood are
Bill
3
put
stories.
that house out here.
Our
They
stores are
use it all the
3-story.
time.
You got
They
the
use it
roof.
all the time for lifting over the house to get to the back of the house.
You got, yeah,
It's not just used for height,
Fire.
it's used for length.
For holding.
What we really need to do is
It's
restructure that contract because we're getting hosed.
not getting hosed. It's way
It
cheaper.
sure would be nice.
Way cheaper than
Well,
anything else we
no,
can
We
do.
should also, I mean, but we're paying a lion's share of it that. We're not taking all the calls. Prior Lake's taking the calls.
Yeah. It's,
And they're paying the highest portion of the
Not
budget.
proportionately,
you're right.
they're not called, they're not.
Of course, we're
proportionally
10% of the calls and we're paying 18.5% of the cost.
Because of your market values.
Yes.
Well, why does that?
But that's there's a fair share value, there's a fair share model that fire departments use. Whether you're at the city, cause I used to have to do it for Montemita to the townships that we served, but there's a fair share model. And when we took on part of Stillwater's, because their ISO rating needed to be improved, we took part of theirs into Montemita. And I had to work on that fair share model, but I've worked on that model in 2 or 3 cities. but the market value comes into play in there on your cost allocation.
I don't dispute that. My preference would be having multiple factors of it. A third of it's for call volumes, a third of it's market value, and a third of it is something else. And I can't remember what, but I looked at other cities and how they were allocating, and they didn't have one factor, they had multiple factors. And that would lower our,
We're getting way off
interest.
track, but.
Yeah.
We're getting off track,
Yeah.
because it's not something that we are gonna solve it.
We're not gonna solve that
And,
one.
and but the real solution and what you're probably gonna end up seeing in the end of the day as a fire district, that's gonna cover the whole thing.
Yeah.
Is that in the end of the day, the openness to that is come around big time, and I think you're gonna see that happen in Scott County real quick.
I think there was a little bit that even at scale, there was. There was.
A couple of years ago, I've been bringing that up with them for 10 years. They haven't wanted to do it because they've wanted, they've politically felt like they had to have the fire department with their name on it and everything, have the shiny
Right.
truck for the parade, and now they're.
Let them have that.
I don't, that's, I've always said, I care less whose name's on it, don't matter to me.
We
It
had
just-
our name on it for a while. and they-
That was the last truck,
Vehicle,
yeah.
Yeah, we had
Get
we had an
a new one.
independent one that was,
The fire district is gonna be the
Yep.
new model for it, because I think what you'll see is the tribe, Minneswakan Sioux will be a
Yep.
part of it, Savage will be a part of it, part of Lake will be a
Elko
part of it.
Newmarket.
Well, no, that's too far away. They're too
Not
far away,
necessarily.
yeah,
I mean,
and
see that
plus,
Lakeville and.
yeah, I don't think Lakeville will, but it'll be northern Scott County cities,
You gotta-
except for Shakopee.
Different counties,
Mhm.
Lakeville.
Yeah,
There's an issue.
so anyways, there's, the fire thing will change. It's just gonna take.
It's not gonna change in 2026.
No.
okay, so, right, getting back to this.
Yeah,
I took out the plow truck and put in the fire truck. But are we reducing the levy anywhere?
Not for this next year.
Okay,
I wanted to.
but
Well,
I'll show the income in here.
okay, so if we just go back, Bill, if we're looking at, if we're looking at like in the reserves. And if we stay in the reserves at the 115. Then we're probably good, for a year's worth, because it's about basically a 3-year project, right?
Well, so according to this, the fund balance should be appropriate by the end of 26, right?
Correct.
So if you leave it alone for 26, it gives you next spring to work on capital improvement plan going forward, and then we can discuss whether or not for 27, 28, 29, what that looks like for levy amounts. Because
Yeah, cause we're at $7,000 plus on what the cost of it is
Mhm,
at the end of 2026.
correct,
And what does it do?
27.
The fire truck increases at 126,000. Is that what's in your head? That's what the fire truck impact is roughly.
Per year on the
Per year on-
contract.
So we really don't need that by
What?
27.
No, but there's interest to
It's not
save
for-
if we paid for it, up front versus financing it.
I really don't think it's per year.
No, it was paid for over a period of time.
Are we sure there's interest?
Yes, because all of the contract states that the partners pay their share of the interest for what they cash out, either whether they use cash or they bond.
Okay. Okay.
And they've paid cash, but because it's already paid for.
So I'm going to add,
And
The
saved
income.
$130,000 by paying for it in advance.
In
And
totality.
actually, they haven't paid for it yet. They plan to issue a bond for it and pay for it over 15 years. Is what the email I got from Jason
They do.
Waddell recently.
But we have the option of paying it in cash.
Yeah.
And closing it out and not paying the interest.
And we're positive on that. We're positive that we would not be charged interest if we paid our portion in advance.
Correct. We could pay it off early. We could pay them and then we would not be charged interest.
But if they issue bonds, they're not gonna get interest from us, then don't they have to?
well,
They would reduce how much bond they issue, how much
Yes.
debt they issue.
they want to know, they want an answer from us. If we're going to pay it up front or not, because then they're going to change their
Their
bond,
bond.
Mhm.
because they won't need,
They wouldn't bond
Before we
Right.
make a decision, can we see, either or, like. I don't understand, because I'm looking at their preliminary budget that they gave us, and it goes up $121,000. For all three cities the first year, and then 20,000 the next year and 62,000.
But that's not fair.
It says annual amortization for equipment. And there's a big increase.
Then they're buying a tanker too.
Well, some of that could be depreciation though too. They're amortizing.
And we can ask the question of
Yeah, you can ask the
what our share would look like if we prepaid it.
Right,
I'm fine with that.
right now our share goes from 690,
Mhm.
600, I'm rounding, $690,000 to 816,000. Okay, that's the first year we had to have the new truck, so $126,000 increase for us. But then it goes up the next year only 80,000. And then it goes up, it looks like they're gonna do a building repairs. That's gonna add a ton of, to another 200,000 or 150,000, but the truck is. Isn't the truck done that year? I don't understand how they budget, or how they tell us what we have to pay.
Why don't we do this? Sue, if you and Steve will connect with Prior Lake. And try to understand what the impact of us paying. Or our share of the ladder truck up front. Would do for our annual rate.
Yeah, do you think they could do this thing again and just have a second version?
I think so. I think the only thing I think there might be a hiccup is, Kathy Erickson would have been able to handle that up, but she retired and. I don't know then they just hired a new finance director. But she was the assistant, so she might be able to do that pretty quickly.
Jan or something.
I don't remember.
Would they also at that point know what their predicted cost of the tanker truck is? Cause that was gonna be the next project coming up. They were also gonna replace the tanker. And then we would get credit for part of the old one that they retired, just like we're getting credit for part of the truck. There's a tanker coming up also.
I don't remember. Bill do you have the rest of that plan?
That's
Does it
that's in 30, isn't it?
There's no other equipment.
Yeah,
No,
29
it's
to 30 or
marked
something
out
like
there.
It
that.
doesn't look like it.
Yeah,
And then they've got that fire station remodel. That we're gonna be on the hook for part.
Well, that you also can, because that's a capital improvement, you also can put that on your capital reserves.
Yeah.
Well,
I
let's
think
start
we can-
with- let's
we
start
can
with-
use reserves, and we should use.
let's start with trying to get the info on the
Yep.
ladder truck and trying to understand that better.
Okay.
Okay. So am I reducing any of these levy amounts so far?
I don't think.
Okay, I'm just adding the
I
35
would love to,
thoush.
but
I think we should look with your first thought, Dave. We got $35,000 coming in income, reduce the 150,
I agree with that,
reduce the 250.
but I would like to show it as an income that offsets
Yeah.
that
So
somewhere.
keeps the reserve balance the same,
Yeah.
999, so take the 215 down to whatever the principal and interest balance.
I mean, I'd like to see that too.
And then add the income on top.
And then we probably need to spend the 35 on trees.
Yeah.
Or stormwater.
Or stormwater, one of the two. So,
We already have 30 in there, you're saying
Um,
increase it,
For trees?
yeah,
There's probably,
You can double it.
there's probably well over $100,000 worth of tree work that needs to be done.
We don't have enough.
Whether it all happens next year or not, I don't know, but it's,
Yeah.
it's.
I mean, the problem with the tree stuff though is that we own the trees.
Yeah.
And if they're dead
One's right
and they
there.
fall, or they come down because they're deteriorating, we have a liability
They're
too,
dead.
which is kind of a,
Yeah,
unfortunate thing.
Well, it's right.
Fortunately, we
No,
need more.
all you have to do these.
Yeah, you got an acre in that park over
Oh,
there,
borrow
Casey, that's
Like
all
chainsaw?
dead, standing dead.
chainsaw, probably not as big of a bar as you have.
Oh, God.
No.
All right. So
So we're taking 35,000 out is what I heard.
reserve's gonna stay, the balance is gonna stay the same, we're gonna add 35 in income and subtract 35 from the allocated levy. That makes sense.
in the street improvement.
Street improvements,
Yeah.
that's where the interfund loan is
Yeah.
today.
I don't think I even had any fund loan in here yet.
Yeah, you got,
No,
you got 519. You showed the 519,
Oh, do I?
yeah.
yeah. Yeah, so in 2026, 789, we should have that 30. This was without interest, I just calculated 34,
Oh, there it
609.
You have to forgive me, there's a lot of numbers I.
Oh, yeah.
Yeah,
Well, quite clearly, you can see it's right here.
I can see it now. But I was like, where? is
What
it?
did you do, Leroy, right?
Yeah,
Okay, so if we took the 35 out of there and then
You'll add the revenue in.
Jay said. You want to move that 35 somewhere else?
Well, let's just go down the
leave-
thing and
leave
do
that one
something else
alone.
so we can
Leave
identify.
that one alone for
I
now.
don't wanna hopscotch
It-
around.
it's-
Okay,
Yeah, so just for right now, Sue,
I
take
got that. over.
the 35 of revenue
Yep.
in, 35 revenue
Yep.
off the levy amount there.
Yep,
So,
Go ahead.
not this is
Dave.
big dollars, but the government center on page 1, equipment reserve. Why do we have financial software at 75,000 and why are we capitalizing computers? Is there a need for any of this or do we just gut this thing?
You're the one that put that on there, Kathy.
I would not. I mean, computers, I can't imagine you'd have in a capital.
Really? You don't capitalize yours? Really?
it does, it,
Interesting,
right
we
here,
do.
Not for-
All of our
we only
computer
own
equipment.
$5,000 more is what we capitalize.
Interesting.
It's.
I guess
it's
everybody does it a
typical-
little different from, yeah,
It's typical to put them in your plan, but you probably would capitalize them on your financial statement, but you would put it in here. So that you have
Oh,
like your equipment replacement plan,
Okay,
but you wouldn't capitalize in your assets on your financial statement, but you would put it in here so that. You know when that money's coming up that's gonna be used.
okay.
Does that make sense?
Yeah,
Yes. I know we talked about Banyan. And are we still using that? And is our intention to continue using that, or are we moving to something else? Because I thought we were gonna have that expense. In 25,
the 70,
You had moved
4,000.
to 25, but everybody has gone again, and it's
Okay.
like, I mean. I think we should use what we have, but I mean, I'm not saying we don't need something new, but it's.
well, can we reduce that amount then? Or, well, actually, that's one of the ones that we're gonna.
That was budgeted,
We've already collected for that.
it was already moved, it was budgeted in 24, it's already been.
So
moved
that's
over,
actually part of
so
the
it's
reserve that we could do something with,
there. Yes, and
to
that's,
offset maybe something else,
yeah.
let's
and
slash the
make Bill
7,500.
happy.
But I don't know what else you're gonna need when you get a planner. Or, a permit tech or whatever, I don't know if you're. If
We don't have
you're
anything
going to
now.
need,
But we
any
have
software, if you're going to need a new
That was just-
computer. If you're gonna need a phone right now, you don't even have
Yeah, we
telephones that
haven't, so
transfer.
That
We
was
have two
before.
lines coming in here and you can't even transfer from one phone to the other.
You certainly can,
So it was
They
collected,
can't?
but we haven't spent.
and they need to be
And now
told
we're
how
talking
to-
about not-
they can transfer.
Can they?
There's some.
Okay, because I got a cell phone because I'm working from home part of the time. But I
Well,
gave
yeah.
Donna my phone because Donna didn't have a phone, she was using her personal phone. The one that is at the one that's at the front desk is one phone that's split with two lines on it that the planner and the clerk were sharing. Because there's not another phone there.
You don't need a
So safe, the thing falls down, it has no leak.
You don't, you just need your earbud, I mean, that's all you really need.
And that's.
So-
oh, like a physical phone, that's.
Yeah,
what
we
you're
don't need
saying.
the physical.
Yeah,
Then
You
it's
go
supposed to
through
be,
Teams.
we're supposed to recognize.
We really should get our tech.
Will it
team
fall
involved.
first?
Right, and that's why I said, I wasn't here to set that up, I don't know how everything is, but I know when I was at CLA, everything was on Teams.
Yeah, well, all of our phones are on Teams.
Yeah. But I don't know where your systems are, or how things are
Yeah.
being coordinated, but even when you first get some of that software and stuff set up. Some of that stuff is in here, so that's why the 7,500 is here, because I don't know yet what you need and what you don't need.
That has that issue.
No, we all sell here.
And there was zero balance there, so it's like, you're not,
The problem with
The 74, I don't know yet. I mean, I noticed there are some things that could be added. I know that there's some other, things on Banyan that we're not using that we could maybe use, but I haven't had time
We should
enough
look at
to
the three of them.
straighten stuff out.
Well, but then my point goes back to, if we don't have time, are we really gonna do it this year? So why would we keep
So we
putting
should
money
push
there?
these two things.
You know what I
forward,
mean?
huh?
It got pushed.
Right, well, the 75 is if you decide to do something, yes, but if we decide we're not gonna do anything and what we have works, then it can be used for something else. But that's why there is nothing planned for 26.
We're pushing up.
But it's like, I haven't been here long enough and I haven't had time to even evaluate what you need. But that was budgeted in 24 and it was already moved over in 25.
Yeah, I'd suggest we just kill the 75.
That's,
Microsurfacing and painting.
that's what I'm thinking, you know. For now, and then we can just re-budget it, and we know what we want.
Bill?
Okay,
Yeah, but then how does that help us in the budget for 26? Cause there's no expenditures there. So are we saying we're gonna transfer that
You're
seventy-four
dropping your
thousand?
levy by 7,500.
Oh, the 7,500?
7,500.
Oh, yeah.
Yeah,
I was waiting for you to
Well,
just jump on
right.
board, come on.
Let's go up.
Slashing stuff.
Let's go up one category too. There's no expenditures in that one either. We're levying $25,000. Hey. For something like city hall building and maintenance.
That one I actually,
so I will say.
I don't think. we
I'll say
should
two
change that.
things that we need to be conscious of is that we didn't do this year is we didn't replace the AC. No, we didn't have a failure this year, and I know we had a failure on it in 23. And at that point, the gentleman that came and serviced it said it's getting past its useful life.
Yep.
And we had budgeted 6,000 this year to do that. And we didn't do anything. We were supposed to resurface the parking lot this
We haven't
year,
done that.
and we didn't do
Yeah,
that.
stripe.
And stripe,
Right, but we
but
did,
those just
we did.
go into
So-
the next year then, right?
So that,
We cover that
but
into the next
exactly, right? That's what I'm, that's what the point that I was getting at, when I was just saying, when Bill said there's no expenses, that's why I wanted to make sure we were identified that there were some things we didn't do, but we levied for them that we should encumber forward to 26.
So do we need the 25 and the 26 then?
Yeah.
Because we already levied for it in 25.
well, what other improvements do we need or repair, well,
Well,
What other
there's gonna be
repairs do we need?
repairs is what's gonna be it's not gonna necessarily be improvement, but you don't know what's next on the repair.
This is the
piece.
other one that what are we doing with this building?
That we still haven't even had that
We haven't
fully, we
talked
haven't
about
fully
rates.
vetted out that whole.
Which I still don't think is the right thing, but I think putting
Piece.
some money aside to, the inevitable is coming. We're gonna have to do something with this building, so putting some money in here,
yeah,
to me, still makes sense.
It does.
It's not gonna, it's not gonna go to waste, that's for sure.
so are we fine carrying over the 45?
Yes.
And then the 25 and the 25 we have, or are we just looking at carrying over the 45 and not to the 25? Because if you look at. I don't know,
I would
I
leave
don't
the
think
25 alone.
25.
I would leave the 25.
Do you want me to move the 6 and the 14 over to?
Yes, please.
26?
yeah,
Yep.
that would help.
I know that there's still maintenance expenses coming in on the government center for some of the studies and stuff you had done. That I don't know what the cost is. That's not in here yet.
That's nothing huge. But we remember we're doing the door project we just approved too.
Right, that's what I mean. I don't know what
Mhm.
some of those costs are that still come out of here. So you want the 75 out of the
I think so, that's
the
software,
equipment reserve?
no,
Well, this general
Yeah,
government
yeah.
equipment reserve.
yeah, that's 70, the 74, 115.
$74.
Financial software,
No,
No,
Jay, the 75,
Yeah.
we're looking at the yellow line.
oh,
Look at
I
the-
got you, I'm sorry,
look at the-
7,500, okay.
We can decide next year if you.
Oh,
want
well,
that
let's,
74.
we still wanna hit that 74.
Well. We could decide next year about the 74 if you, I don't know what you need for software yet.
But we don't need to decide that today.
No,
That's, we
I
got.
guess,
we have
so
to
you're
get
talking
pushing
about the 7,500 that,
The levy piece,
Yeah,
right?
levy.
So,
Yeah.
so
Jay,
if
we're
we,
focused on that.
right, so if we have planner. You get, I mean, there's gonna be some miscellaneous stuff.
Yeah,
once you
but
break
there's enough,
somebody-
Yeah, about
there's enough of a
$100,000.
fund balance
No.
there to, there's enough of a fund balance there to cover.
So get rid of that.
I'd say the same thing with the planning reserve, get rid of the 7,500, we're not gonna get to that this year.
Yeah,
We've got $150,000 there.
okay.
Now, the planning reserve is going to pay for some of your comp plan, and I don't know how much your comp plan is gonna be. That's gonna be upwards of $80,000 over 3 years.
Right.
But you,
I took it out of here and I put it into here. And I don't, you had, your codification wasn't done,
we're gonna need to do some of that.
and that's gonna be more than the amount you have in there, I think.
Yeah, with legal.
Yes. If Amy was, cause you had budgeted last year thinking Amy could do it. But you're gonna need to go and have that one done with legal, and that's gonna, I know for a fact.
What do
I've
you
been in
think it's
cities
gonna
that
be?
That's gonna be, I don't know, I mean, I haven't done it a long time, but I know it's not.
Cause I've been looking at that, you read through the whole thing and it's just like, we gotta change
You gotta, you
Credit
gotta,
River Township to
Yes.
Credit River City, we've got, there's a whole bunch of stuff I was talking with
yeah,
Shannon about.
and that's
that
not,
needs to be
it's
updated.
not cheap. And so I know that those numbers don't look real.
And that's the
thick to
first
me.
part of the comp plan stuff we need to get
Right.
straightened out. So,
That's why I said your comp plan is in here and.
No, actually, no, you wouldn't do
But it-
ordinance changes until after you had the comp
Had it-
plan.
had it
Then what you do is you fit your ordinances to match your comp plan.
okay,
Yeah, that's usually you do it that direction rather than, you wouldn't change your ordinances up front. Until you do what you would do.
We need to.
There's
I mean,
wording stuff,
We could
but
have that argument later.
it's not an argument, it's
Yeah.
the legal piece of that is anywhere that any ordinance that was built as when we were a township, all those words immediately just copy over to city.
Mhm.
Except man shall.
Those still always mean may and shall, and they still get you in trouble just as bad.
So just knowing that. I think it's gonna be more than 80,000 that's used here, with, even with your codification. I don't know what number. What you're gonna have left in there.
Well, the smart thing for us to do would be to try to do a portion of it and not try to wait until the last minute. To do all of it and
Which
because,
is
and it's
why-
gonna be expensive.
Which is
that's-
why I left the 7,500 in there, 'cause I said that-
Here.
and then it
Leave it in there
stops
that-
after 2029, thinking that. By that point in time, we should have enough in there.
Here you there. Just leave it in there.
But I don't think you're gonna have 80,000 left by the time you do those two.
No.
So is Shane double counting? We did a couple extra roads. Remember in subdivision was that, Casey?
Casey.
Did he do a couple extra roads this year?
Or was
that we
patched in?
budgeted? Wasn't in the budget. Do we confirm
No.
it doesn't have that in the 2026 budget because we did it in 2025?
No, he doesn't. He did look at those.
And there's nothing in the microsurfacing that we can't, if we wanted to reduce the levy a little bit. All of these make sense to do it next year, like it would be.
I cut the microsurfacing budget. I mean, what was levied in half already.
It's just that we go from 172, which was light, I agree, but then to 454 and then back down to 300.
Well,
Well,
that,
the 454 is a catch up and then it brings you on to the more,
Current.
It
level.
always was about 350 to 400,000.
Right, not. Okay, all right. I think we should lower it.
That's easy.
What?
First one.
Are we still looking at this one now?
Is there anything else on the capital piece? You guys want to talk about?
So just to be clear, we're putting $1 million into the street improvement from
I'm gonna
Or
find
check.
out what that amount was that was entered in, yeah.
Yeah, and Abe, that's not something that we can't approve that tonight. That'll have to come back at a later council action.
Putting it into what?
The street improvement. Yeah.
So right now what I have is. I'm moving the amount from the first one over to 2026. I am removing the 7,500 from the levy for the general government equipment reserve. I am adding back in the 35,000 revenue from the passage repayment and lowering the 215 by that amount. And I am moving the fire truck in and removing the plow truck for 2 years. And that leaves
And
us
then
now to,
clarifying with.
yes,
yeah.
clarifying, yes. And then now we're to the stormwater, which I think Jay wanted to speak to.
We probably need to talk about the stormwater in two different categories, maintenance and capital.
Well, we should, in 2026, we should come up with a capital improvement plan.
But that's probably not a capital improvement expense.
No,
Planning wouldn't be, would it? Would you consider planning, developing a stormwater capital improvement plan a capital expense or?
well, I mean, we inventory.
In your capital plan,
Okay,
but when we report it, we would
It'd be an
probably do it as
an
an
operating.
expense. But likely you'd want it in here because this is where you're building your funds up to do those special things.
The other thing is, it's, I mean,
And it's
these are
probably gonna be-
inventory. I mean,
Right.
they are something that, you know, that we have a
Yes.
responsibility for, and it's an inventory, it's a value.
So, but I mean, it's just like the comp plan, things like that, things that are done over time, it's probably not all gonna get done in 1 year.
Can't be, there's.
Well, and that's
80
why,
things now.
that's why that's why you would put it in your CIP
Right.
plan. Your CIP is for long range type, one-time type things.
Yeah,
It doesn't necessarily mean that they're going to be capitalized as assets.
correct.
right.
They would be reported correctly, but this is where you're watching them.
But the idea
So-
is that if we do that, if we make the plan going a long range plan on it, then we can just continue to hit each one of them. We don't have this buildup and a mess that we have to respond to at some point,
Mhm.
which we actually have to do now at this point with some of them.
Correct.
So,
So I think Shane had mentioned like 20,000 for doing a stormwater capital plan.
I think that's what he said.
Yep, he did.
Okay,
The
So then-
that you told me so far are 42,500.
so we have this storm drain at Lynn Drive. We still have to do the.
So that's already in here programmed for 40,000 and 26.
So then,
So there's some expenses that, did we,
we had something over at St. Francis and.
There's a pond that needs to be addressed.
yeah, but I don't think we
No,
did, we
no,
didn't
no,
do
there
any
was a-
capital.
There was a cleanup, there was a storm drain
Yeah.
repair that we just had last meeting.
Yeah, catch basin.
Catch basin at 160th and St. Francis.
Yeah. $2,600.
Do we have any, so
No, we have.
You have only, for
More
next
to do.
year, you have $20,000 budgeted for maintenance for storm drainage. And then 25,000 for culvert maintenance. What I did is I took the 40,000 and put it in here because it had been in here before.
So now you have to add all three together, and that's the catch that we're gonna pay for culverts, right, or storm? Cause you're looking at the general fund, you just mentioned two numbers from that, plus the capital, we had 40,000.
The 40,000 I moved out of here because you had 60,000, you had me add. I had 60,000 in here, you have pond inspection, MS4 permit,
that's right.
you had to
That's
put
what-
20,000 in there.
That was what was 20 grand.
Yes, and then you have repairs and maintenance of
That's
20,000.
not putting together a program, that's.
Oh.
That's.
Have culvert maintenance for 25.
Would be
So those are your repair items that are in here, but your like planned
Take that.
projects. The only one you have here is is Lynn Drive.
I guess we have $65,000 of operating expense for storm drainage and we have $40,000 for capital.
Correct.
So it's $100 and some thousand dollars.
If we start on these,
And you've
Start.
already used 70, you budgeted 75,000 this year and you've already spent 79 as of the end of September, so I don't know what else is still coming out of here. Where this 13,000 reserve you had is gonna go down.
we're probably gonna have another 8,000 when we get through with these next two catch basins.
So do we have enough or not?
I don't know how much they are. Just
Yeah.
giving you a rough estimate.
Close to $3,000 for the one.
Yeah.
Yeah, well, the next one down in Chris's neighborhood's gonna be expensive because,
Is there paving too?
yeah,
Okay, yeah.
well, there is.
That other one didn't have paving.
There is on both of them.
Yeah, the
Figured one's
2,600
gonna be
didn't have paving. That
5 to
was,
6 grand and the other
that was
one's
just
gonna be.
sod.
So is this where you were talking, you might wanna move that 42.5 to this part?
To stormwater operating or stormwater
Operating.
capital?
Operating.
You
Probably-
mean, you mean here, right? In the capital?
Well,
You're you're pointing at this one, right?
I can't see your desk there.
Well, you're-
the one you have,
Yeah.
yes, you are,
Yes.
he is what, look at the
So
capital.
you're talking, we have 30 in there now, but add 42.5. That we reduced in the other places. To levy here,
Well,
right?
no, I mean, it'd be nice, but I'm not just saying, let's move numbers. I'd really like to figure out what we should spend. Versus just throwing numbers at it. I mean, so we've identified, we've got a permit that Shane's gotta do for 20 grand, right? We've got an expense of 40 grand for
Lynn Drive.
Lynn Drive, so now we're at 60. And so what else do we need? Leroy just said, and then we've had 2,600, so let's just
That
round it
could be
to 3.
this year.
That's this year.
That'll be expensive.
But you're saying we've got another 8. So
That'll happen this year.
it will happen this year.
Yeah.
So then what, all right, is that in what we're over budget on right now? The 79 that we just had?
We're over the 75. We spent 79 so far without any of those. So
Okay.
so this balance in reserve is gonna be less.
Right. All right, so, well, let's just go back to, we've got 40, 30, and what else do we need to spend?
Well, if we wanna do a stormwater capital plan, that'll be another
20.
probably 20.
So now you're at 80. Instead of 100.
We're at 125 right now.
Well,
And that isn't any.
you're mixing, I mean, you've got 65.
I have no idea what numbers.
65, you got 65 just for maintenance right now. So that's not the capital plan.
Right, so that would be,
So
That'd be another 40 then, 20 and 20. Is that what I'm hearing from you?
40 and 20 is 60. If you have the stormwater capital plan and you have Lynn Drive, then you have 60.
I thought we were doing stormwater for 20. Capital plan.
You
so,
just said
so,
stormwater capital plan.
but then
correct?
there's also the,
Lynn Drive.
And
but
the
then there's the MS4 permit as
And the
well.
MS, hey,
In your.
It's already in the
Alright,
operating,
so-
perfect. We
so
don't
the,
need-
so the MS4 permit's about 20 grand. The capital plan is about 20 grand, so that's 40.
Lynn
So
Drive
that
is
we're on the
40.
same page.
That's 80.
And then
Right.
Lynn Drive is 40,000, so now we're at 80.
Mhm.
So that's, so
But-
we,
But then for general maintenance, you have 20, you have about another 45,000 between culverts and regular maintenance. For things that happen that we have to go and repair.
So where's,
so that, where's that at?
That's page 7 of the operating budgets, and that's a really little,
The one I can't read?
yes,
it's under storm drainage.
I only see 25, where's the other
The-
20?
Well, the 20 is in where that peach color is.
Oh,
I-
the excess of the 40.
we
The
had-
excess.
Yeah, because there was 60 in there and I took the 40 out for the project.
Yeah.
So I left the maintenance and repair piece in there.
Mhm.
for things that come up that you have to repair that we don't know. Culverts aren't cheap when something happens.
No, okay, so the MS4 is on a different line, okay,
MS4 is on the top.
yep,
Because we had 10,000 for engineering fees for just normal, maintenance type things. And you had, because of the permit, he
Yep.
said to increase it 10,000. So that's why that's 20.
Okay.
So your stormwater capital plan, that's another 20,
mm-hmm,
which is in your CIP here, and Lynn Drive is in the CIP.
Okay,
And if those other projects were there that you just that means it's gonna go more than the 79 actual I have right now. Which means that 13.9
9,
is
reserve
going
is
to
just
be down,
disappeared.
probably gone.
yeah,
Yeah,
so we probably need to levy for 40. Probably more than that,
more.
60.
Okay. So to be clear, we're spending what, 120
Well, again,
total?
so remember, you gotta separate the two.
Yeah, I
One's
understand,
operating,
I understand.
one's capital,
But at the same time, I just
Right.
wanna keep track, I wanna
Yes.
keep track of what the total is.
Yes.
Anyhow.
Okay, right now you've got 125
Okay,
between the two with the stormwater capital plan and Lynn Drive and then your maintenance.
okay,
Where's the 20,000 for the stormwater capital? Is that something you're
that's,
adding?
that's what we're adding,
That's what they said
Yeah.
they had.
so 125 total. And you can divide the numbers up.
It's 65.
I'm really confused with this 20,000. What are we talking, what is this for?
for the capital plan,
And for what?
to build that, so much like our road.
Oh, so we're saying levy another 20. We're not
Correct.
saying it's 20,000 expense, we're saying. it's-
Well, Shane estimated it, he verbally estimated that.
His
Probably
expense was gonna be around $20,000 to do it. To do the
Correct.
program, which we need
not
to do next
showing
year.
on here
No, correct.
or here.
Correct,
Right,
Correct.
they're adding it as an expense on here.
Okay.
mm-hmm,
And I'm saying, if you look at the top, that reserve of 13 is probably gone after whatever you just
Mhm.
approved at the last meeting.
And then we have no reserve to handle any collapse culverts or anything else that come up next year.
no, you do,
I mean,
we have 20,000, we have 20,000 in maintenance.
In maintenance, yeah.
Yeah,
That's what your maintenance budget's for in your operating.
Rainy
so-
day fund.
right,
Okay,
if it snows a lot and it's cold in the spring, we'll use that up with Goliath jet and culverts.
okay,
And pushing the snow out of the ditches.
right.
It's been a while since we've done that.
About 10 years.
Might be this year, according to,
Well, and then that's one example of, we have the 65 here, if we don't spend all that 65 next year, that would be one of those things I would suggest you encumber and put into here, because it would be used for storm,
Yes.
yeah,
Mhm.
and that's an example of what I was talking about.
Yep,
So just to be clear, we're saying. On this guy, we're adding.
Adding 20
on the
grand.
Top and 20 on the bottom. 20 in revenue.
Correct.
For levy and 20 operating expense.
Okay, now, are we adding 20 at the top? Because I didn't hear that yet.
Well,
Well, we might
otherwise
have
we're going
to-
negative, right?
yeah, we might have to add more than 20 at the top. Because if that project, the culvert repair in Lynn Drive is 40. And if we're gonna say we're gonna spend another 20 on the capital plan, 30 is not gonna cover that.
No, because you would have that, what it's showing is 13,975 now, you'd have to
Right.
minus the 13,975 from the top.
Correct.
You're gonna be a negative, like. You're gonna be at like a negative almost.
so are we saying then that the yellow line, the 30 is gonna become 60?
Gonna come up $1.80.
Correct.
So it comes up 30,
Mhm.
right?
Yuck. No.
oh, going the wrong way.
I know, but let's,
No, then we can't afford it, so we're not gonna do it. That's what you do, you only have a certain amount of money you can spend.
Well,
Pick and
well,
choose.
The whole
The
3 feet
problem-
deep in the road right now, you're gonna let it drive in there and sue us?
The
Okay.
problem
Well,
is in the
the grant
stormwater.
writing though has nothing to do with
The
that. It's
problem
all
is,
standards.
okay,
Yeah, the
like
problem is,
20,000 on the plan.
we know we
Permit
have,
has to be paid.
we know we have stormwater problems right now that we
Yeah.
have to take care of, and if we don't plan for them, then we're gonna just have to budget, we'll have to do them as ad hoc projects.
Okay,
And it's the problem, right? We know in Country Court that pond, stormwater pond is silted in. That's gonna be a big project. That's probably gonna be
That's gonna be
$200,000
But-
project.
so
that-
you know of that project, so why do I have to spend 20,000 for an engineer and say we have to do that?
To build out a plan over, so we can say over X amount of years, build that, just like a road improvement plan. It's the same capital type of theory. You go out and you say, we're gonna do X amount each year to keep our,
ponds and
so that we can
Yeah.
budget for it over X amount of time.
No, that as a resident, that for the last 20 some years that's been going on has worked very, very well. And I would like to see it, whether I'm a resident or a councilman, I would like to see us have a responsible plan for these 79 plus 79 retention ponds and then the
72.
culverts.
72.
72, well,
Keep
it's
it
gonna be
pretty
we added some with the latest developments that we just improved, so regardless, I mean, it's, there's a lot of them, we haven't done anything with any of them.
So here's the problem I see though, again, I'm on page whatever of this guy.
Yeah,
2023, we budgeted, this is getting back to what Bill says, 138,000. We used 68, so we over budgeted, estimated almost $70,000.
I think that's for the $70,000 in 24. If you look at the reserve balance, I think that was moved over here.
Okay, but then in 24, we had 28,000 that we over budgeted for, that didn't come in here. So where's that going? Just getting spent somewhere? That's the problem I think Bill's got, and we over.
And that's why I said I think those problems get solved if we start encumbering things and doing
Yes,
that and moving them over.
mhm.
I don't know that got moved over after 24 actuals were done because the people who did that the year before were gone.
yeah, so instead of adding 30 onto the levy, I would say let's take out that 1 million that we were gonna move in here, let's put 30,000 in here. And then we don't increase the levy.
Oh, the capital, so road and bridge. The transfer that we're talking about doing, that we still have yet to approve, but
Yep,
when we make that transfer, take 30 of that and put it into stormwater, and that's fine.
fine
We
with
can
that.
do that, yeah.
Yes. I'm fine with that. Do we wanna go back and do that?
Are
with
you
the-
talking?
Well, we can't, so
Abe, are you talking, take the transfer from Road and Bridge plus the overage that was done here? And move this overage over to here?
no,
I'm just saying take
no.
the 30,000, cause we've been
Oh,
spitting out
Bridge
6.
fund?
Correct. So whatever number you come up with to recommend transfer from road and bridge to the capital, 30,000 that goes to stormwater.
Okay.
Then we don't have to increase levy at all.
Right, yeah.
You happy with that?
Mhm.
Yeah.
We're going the right way.
So it's 8 o'clock. We had talked about 8 o'clock.
Is there like one more thing we could maybe try to pick off?
Yeah,
No,
$50,000 contingency fee, zero that out in the general fund. Or not
Where is
fee,
that at?
Not a fee, contingency, it's on one of the last line items on the operating, the general fund. It's still in the-
Contingency fees for what?
Can I ask a favor? Could you put page numbers on this?
They are there.
I did, it's just one.
It's just so-
oh shit.
Oh my gosh!
Hey, Abe,
I am so sorry, thank you.
I see it.
Abe, I think if Leroy's boss were here, he'd tell you to get your phone out.
I got it.
Find that.
I had to do this,
Okay.
and all of a sudden I went to the printer and I
Page
was, my
eight?
God, it all came out
Eight.
small.
Okay,
It's the
no
next
problem.
one.
I'm sorry, I missed that.
Page eight.
Page eight.
Before 9?
Okay, clearly I can see
Yeah,
that.
take my glasses.
There it is, right here. I got my 3-inch magnifying glass in the truck.
I'm sorry, I didn't think we would be looking at this, that one.
Okay.
I would have redone it, but I didn't want to.
Which one is it, Bill?
Page 8,
Down at the
the
bottom.
$50,000. I know there's a note that said it used to be 100, but considering that we historically over budget expense and come in better than expected, we don't need a contingency. Plus, we have a very healthy, I know, we
Reserve.
take money out of the reserve, but we still, even taking that out, still have a healthy reserve. And we, in my opinion, to me, that when I see contingency as a slush fund, and I don't wanna put it in there, if we have to spend something, we'll spend it. But I don't like budgeting things that. You can have good things that happen, bad things that happen, typically evens out, you don't need the 50 grand. So, I don't think we had it last year.
Makes sense to me.
It's an easy 50.
Well, I would say this, since we have reserves, a reserve is a contingency. And, I don't know that we. You're basically, we're doing two things. So, I mean, if we have a reserve, then we don't need a contingency because we have a reserve.
That's what
Yeah, that's exactly what it is, so.
We never.
I'd feel differently if we didn't have
We
a
never had
adequate
a-
reserve.
If we didn't have them, we should.
Pull any
budget for
money
something,
out.
but we do.
We became a city, it was all.
We have an ample reserve, we've got
Paid
carryover,
for and
so,
that's all.
I mean, the $50,000 gonna break us, but
started it back in 2002.
at the end, that's so.
Right.
I would like that.
Yeah.
I'd be for that. Since we have a reserve. That can act as the contingency.
Okay, that was it.
Well, the last one is. Where your tax rate was sitting at, this one showed that what I had prepared had the tax rate. Stayed exactly the same as last year. Now with the 42.5 and the 50,000, that's going to reduce it.
Is it good then?
Yes,
I think the levy increase, if we do that, those two, the 42 and the 50, that's 92. From the number that we got, the 29,294, I think that'll get us to around a 5.5% levy increase, which I was comfortable with.
Well, the only thing we still need to look at is what we're gonna do for tree cutting next year.
Yep.
That's the,
What are-
that is the only big
Yeah,
one.
I mean,
that-
what are the-
That's the only other big one that I'm still concerned about because
well,
Can we talk about that next time?
we can,
Yeah.
I'm fine with that.
As long
I
as
just
we're-
wanna keep that in front of, I don't want that to get lost, right? Because it's,
2.5 so far, and tree cutting needs to be addressed.
Where's tree cutting? Do we have?
so it's
it
on
here?
page 6,
We have a lot in it.
we have 50,000 in there right now. But I don't know that we know what we need to do for sure, and we will look.
we
The
just
Casey-
identified 3 trees in our own lot that
The
come
the
down.
Casey Park is full of
That's-
ash trees that are dead.
That's like, there's at least 100 trees in there.
That'd be
Chris,
40
do you know
grand.
what South Prior Lake is doing with their dead trees? Are they taking them down are they doing a program where they,
I don't know. I think, I mean. You know,
because we're all in the same boat, I mean.
They identify them, I think.
They
some
identified
of-
important ones and they're taking those down and then they're.
I know
So the important ones are the ones that would fall on a kid. So the ones that in our parks where they're so open and they're on the edge,
Well, except Casey,
alright.
the Casey Park is different because that one has,
Oh,
that
that-
one's half that land there is
That
trees.
woodlot that's there, that's all.
And
ash.
it's
Almost all
a lot of ash and the kids have cut trails through the middle of it and they're constantly back there running around. So
Okay.
it's not a great we don't maintain any trails or anything back there. They've done that and they've played back there and.
But it's also a public park, so,
It
you
is.
know, I mean, it's
But
identified.
but it's still not.
We did a sign saying.
We get
that
$5.
it's-
Well,
Do not.
the easy
cross
part,
sheep and
the-
then
the-
resell.
or
Escape.
the
Yeah.
easy part would
Use
be,
it at your own risk.
the easy thing would be to just like one time clear cut all the trees off. And plant grass, then they're done maintaining the trees.
Oh, I know.
In the long term, that would be probably.
Just to be
the best
clear, that
solution.
isn't true.
That probably would be met with a little bit of resistance, a little bit, some people would be, yep. Do it, some people would be, whoa, but we love that trail back there.
So we're thinking we're gonna need to spend another $20,000 over what we spent in 23 and 24.
Might have to spend more,
At least.
at a minimum.
So again, so we can talk about this next time, but I wanna cover that one again before we close this out. So
Could Steve have a conversation with?
we could probably
with
call Randy,
Rollins
and have
And just see, get it, just a guesstimate?
I asked him, he said probably 40 grand to clear cut it.
the Casey Park.
Yep.
Can we do a controlled burn?
There's too many other trees and other, it's up against houses and stuff.
And there
We get-
are so many.
Firefighter
down
training.
in there.
So
Yeah.
do I need to do anything else if we're gonna continue this conversation?
No, other than, you know what, maybe Sue, hey, maybe just do a quick calculation of where we're at.
Yeah.
For,
Okay,
on the tax rate one, the back
just on
one.
this one?
Yep. Just do a final, just so we know about where it's at,
Okay,
and then,
Well, I wouldn't mind getting this document again. I'm sorry.
Yeah, clean,
So we know what the numbers are. Just one.
Yep.
and then just, could we do this one,
You just
that
go-
size?
Yeah.
Yeah.
I do.
I do.
All of them. But I'll just do the same thing and
Yes.
and you
Yeah.
don't need another memo or you
No,
want a
no.
memo? Okay, so I'll just rerun these papers again, all the
Okay,
papers
so-
again.
Bill, do you want a guesstimation of what it would cost to? Cut
budget
Casey
number.
Park?
We need a budget.
Okay.
But let's not forget, it's not just Casey.
No,
I mean, we got
I'm
other
not
places.
saying that, I'm just
No.
saying a guesstimation of Casey.
Yeah,
Park.
I would.
That's the major one.
Yep.
I would.
We could do the next part the next year too. It doesn't necessarily.
The other parts don't have,
Oh, they don't.
We don't have
We could
anything
have-
else to clear cut, I mean, that's the, Casey's is the big one, the other ones have a couple other trees and no, the only thing in Creekwood would be that lot we own across from the park there, if there's anything that's gonna fall into the road there, but. Those just fall on the road, and we clean them up when they fall on the road.
we have those under control.
All right,
Sue,
Can't
thank you for.
tip it the other way.
Yeah.
Drop in the creek.
Abe, motion to adjourn.
I'll make that motion.
Second.
Motion